Hello, just want to make sure that the sound is coming through okay. How's that sound? Is that all right for everyone? Brilliant. Welcome, everybody. Thanks for spending time here today. Walter Peters here, and you're here at the Naked Trading webinar. So, today's topic is trend lines. That's today's topic. We're going to talk all about trend lines. So, let's get started. Now, what I want to do is go over 3 different ways to use trend lines. We're not going to use any indicators here at the Naked Trading webinar. And I'm also going to entertain your questions. If you have any about the live markets, we can take a look at the charts at the end of this, if that sounds good to you. So let's get started. So first off, I am not going to argue with anybody about how you should draw a trend line or, what is a proper trend line. There are books written about this, and whether you believe Tom DeMark or Martin Pring or whoever you follow, or me or whatever, it doesn't matter. What matters is that these principles, these particular setups, can be used with trend lines. I don't really care how you draw them. So I want to get that, out of the way straight away. And it depends on what type of market you're looking at, which one of these strategies will work. One of them kind of works in sort of a range-bound market. One of them works in a trending market. And one of them works at the end of the trend. So it doesn't really matter what kind of market you're looking at here. You can find a trend line strategy for any sort of market. End of the trend, in the middle of the trend, or when there is no trend whatsoever. All right? Sound good? Let's roll. Okay. So let's talk. And if there's any pairs that you would like to use, I'm happy to use those pairs if you want to make the suggestion. I just wanted to put that out there. So if there are any pairs that you think, take a look at this one, I'm happy to do so. But otherwise, I'll just scroll through here until we find some good examples. So actually, it's funny. It's funny that the first chart, I wasn't planning on using this example, but we could. All right, so I'm going to go with this pound Aussie chart because it just gives us a really good example of one of the trend line strategies. And this is kind of a, it's almost like cheating, but essentially what we have here is a situation where the pound Aussie 4-hour chart, that's what we're looking at here, has been going up. All right. And what I've done here is I've drawn my my trend line to contain this this current. I don't really need the bottom one. I don't really have to have a channel, but what I have is a trend line to contain this current retracement. Okay, just as I could have done down here. Well, this one's a little bit sloppy, but so just a little bit of background. Sometimes what you'll find is during a trend, you'll find that the market will make these severe retracements where it goes pretty strong against the overall trend. And other times you'll find where the market just kind of goes flat and then it'll re-engage the trend. So let me see if I can find a couple of examples. So here we go. So here's an example here where the market's been going up and then it just kind of goes flat and then it goes up again. Now granted, that was the end of it. That was the apex of that little trend move. But sometimes it doesn't do that. Sometimes it doesn't go flat. Sometimes it'll actually flag down during an uptrend or flag up during a downtrend. So here's an example of the market in a downtrend. You can see how it had this little flag up here. You could actually draw a trend line to connect this retracement move. And whereas down here, it made sort of just a flat line, flat box, and then it fell. Okay? So it depends on how strong the trend. If it's really beautiful low volatility trend, sometimes you won't see these trend line retracements, and instead you'll see really strong trends that have just like a box, so to speak. So here's an example again of an up move. There was a flat sort of rest period, then it went strong, and then it did the trend line here. And what we're talking about right now is this kind of breakout, okay? So you need a couple of things for this. This is a trendy trend line entry. You need a strong trend, which is or a string trend, either one. A strong trend is defined by large candles large trend candles. So that you're in a strong trend when you get really strong, aggressive, bullish candles in a bullish trend, or really fat, bearish candles in a bearish trend. So you need to have strong, big candles that cover most of the ground. So most of the moves that the market's been making are covered by just a few candles. That's my definition of a trend. And then you have a whole bunch of candles that basically go nowhere. And that's what we're going to focus in on, because we're going to get in on this retracement move. So you need to have a really strong trend, which means big candles. And then you need to define your retracement move by the trend line. Okay. So if you're in a bullish trend, you will have a downward, a downward angled trend line. And with the bearish trend, they'll have an upward sloping trend line, which is all quite obvious, I'm sure, to most of you. Okay, so that is also the other piece we need here. Okay, so again, strong trend is defined by the size of the candles. You'll know you're in a trend when your big candles are covering most of the ground and the small candles are just kind of slightly retracing it. All right. Now, how do we know how to enter? Okay, I get it that we're looking for a strong trend. I understand what you're saying about what a strong trend looks like, but then how do we get in this? Right? What do we do? Well, there's a couple of different ways to do this. The easiest, well, I'll show you kind of three, really. The simplest way is to get in on a breach of the trend line. It's also the most aggressive. You'll get in really soon, and you will often get stopped out, unfortunately. So that would mean once you draw your trend line in, as soon as the market goes higher than the trend line, you're in. Well, whatever buffer you have, whether at 5, 10, 15 pips, depending on the time frame. Obviously, in the pound Aussie, it's a very volatile pair. And if my trend line were drawn, right around here, I would say, well, if it went up to 65, 17, maybe I'll get in. So what would happen is I would have probably been triggered on this candle here. Okay, so this candle right here would have triggered an entry. Now I'm not a big fan of this style of entry. It's not my favorite, for sure. It's not what I like. It's not the way I like to trade. I like to trade with a little bit more data from the market, which means waiting longer to get more candles there to tell you that it's ready to go. So it's not my favorite, for sure. But having said that, I still think that some people are going to resonate with this. So that's why I'm mentioning it. So it's just, you put now you're going to have to move your order. So when you go to sleep and you wake up, if the trend line is still intact and it's still, depressing the retracement and pushing it down, you're going to have to move your order as the trend line keeps going, right? Until it finally breaks. Now, stop placement can be below the swing high. So in this case, you might have a stop loss down here. And whoa, sorry. I didn't mean to do that. I meant to use my tool. So yeah, your stop loss down here, entry is up there. Why does I keep losing my, here. It's rough. What the? I'm not sure why it's doing that. Something weird. Anyway, so I'll just do the quick math from 20 to 88. What is that, 140 pips or something like that? It's a very volatile pair, right? The pound Aussie. So about 140 pips or something like that on the from the risk if I put my stop loss down there. Okay, so then next step that I do is I go, all right, where do I take profit? So I've been triggered here. One thing to do is you could put a trailing exit. You could also put a trailing exit and a target. A really clean and clear target would be right here at 66.70, which is right around the top here. So I'd say right around 67 or 66.80, 66.70, somewhere around here, just in case it makes kind of a lazy top or a moolah top. So we go like this. We go boom, 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 bam. I think it would have been hit here, maybe here, but most likely here. And so your target's hit. And if you have a trailing exit, maybe it's trailing below these lows here, and maybe you get stopped out on this candle, you know, something like that. So maybe it does a little bit better or about the same on the trailing exit in this example. But that would be an entry just based on that. Now, the other way to do this is to wait for it to break the trend line and then come back down and touch it. Now, it didn't really do this here. It did break it. Technically, it did break it, hit this resistance level, and then touched it back down here all in one candle. But I would look for it to break the trend line, come back down, and bounce off the trend line, and then go. Are there any questions about that? Does that make sense? It's a pretty common way to trade horizontal support resistance, but you can also do it with trend lines. Basically, what you're doing is you're waiting for. Now, if I looked at a lower time frame, this would look a lot better because you'd see it like on the 1 hour go up here or the 30-minute, and then come back down here and bounce. It would be really clear. So that's another entry. So the first entry is just put your order above the trend line. If it goes and spikes up there, you're going to get in. You're also going to get stopped out quite a bit because a lot of these are just going to be probing the trend line. If you wait for it to break out and then come back down and bounce off the trend line, confirmation candle, that bullish candle to tell you that it's going to keep going. And the next way to do it is to just wait for it to break above the next level of horizontal support resistance, which happens to be right here on my chart at 65.70. So you wait for it to break that and then come back down and bounce off of that. Sometimes you will find that the trend line and the horizontal level coincide and are pretty close. And in fact, that's what happened here. See this one? So this is an example of what I was talking about, where the horizontal level and the trend line are pretty close together. And that happens more often than you might think. You could wait for the close, Franz. Yep, Franz, you could definitely wait for the close as well. But what I would say, from me, what I would say is I even would wait for the pullback, you know? So in this case right here, you can see it goes whoosh. It closes above. So this is like an example of what you're talking about, Franz. It closes above the trend line and above the horizontal support resistance level. And then I'm going to hit my F12 key here, advance my MetaTrader chart, and then it just kind of sits here, and then it's gone. It's off to the races, right? And it does reach the next level, and then from there it's over. So it was the end of the trend. It was the end of the trend. Now we're going to talk about next. We'll talk about what to do at the end of the trend and how to use trend lines to trade the end of the trend, which is probably my favorite way to trade trend lines. So, Franz, you could wait for the market to breach the trend line. You could just trade higher, or wait for a close, or you could wait for a pullback to the trend line, or you could wait for a pullback to a nearby support and resistance level. Either way, whatever makes sense to you. Some of these things are going to make sense to you, and some of you are going to go, why would I wait? Why would I even look at horizontal support? You know, if that's what you think, then fine. Don't even look at that. Some of you think, why would I wait for the pullback? I'm going to be too late. I'm going to miss out. If that's what you think, then fine. I'm always a big fan of waiting for another additional candle to give me information. What I found throughout the years, and I haven't been trading that long, about 15 years. What I've noticed is that if I give myself an extra candle, I'm almost always happy about it. So it's usually a good thing to give myself that extra candle. Usually more than happy to do that. It usually is a good thing. So, all right. So does that make sense, guys? You wait for the market to breach the trend line. You wait for the market to pull back to the trend line and bounce off of it. You really want a bullish candle if you're in a bullish trend, a bullish candle to bounce off of it, or it can just bounce off the nearby support resistance level. Any of those make sense. Targets, you can slap a trailing exit and a target. It sometimes will make sense for people to use multiple exits. So you might have like an aggressive 3-to-1 target and a trailing exit. So if your 3-to-1 isn't hit, at least your trailing exit is, or a 1-to-1, just to get a little bit of profit and see if you can get a runner, that sort of thing. All right. Again, because you're in a trend, it makes a lot of sense to allow yourself a trailing exit, right? Because by definition, you're trading a trend. So, yeah. All right. So hopefully that makes sense. You can see, yeah. Okay. I don't want to talk anymore about this chart. I'm gonna stop. I'm gonna stop. Hopefully that's pretty clear. Now what I want to do is talk. Actually, we could probably still use this chart for the other one. Now I'm going to delete these, unless you guys would prefer another chart. I am going to delete those trend lines. We'll draw a new one on here. Looks something like this. And I'm sure there'll be people that will argue, oh, you drew it the wrong way. It's always funny to me that it's like, it's always funny to me that it's an argument. But anyway, okay, cool. And then now this is the 4 hour. So I'm going to back it up and go to the daily. Not a good chart. Not a good chart at all. In fact, boy, this is a terrible chart to show you this, but I'm going to do it anyway. All right, so what I've done here is I've attached this candle low here to this touch here, and I've made another trend line on the daily, okay? Now let me go back to the 4 hour and show you what I've done here. All right, so what this is here, and this is kind of nice though, because you do have a double bottom here or a double touch on the 4 hour. So it is kind of nice. What this is this is an example. So that first system we talked about, where you're drawing a trend line to contain a downward retracement during a bullish trend or an upward retracement during a bearish trend. And those 3 entries that I've given you, that's something for you to go test and Forex test or see if it works for you. That's what you do during a trending market. So I promised you 3 things, right? Well, 4 really. When we can talk about the live markets too, if you'd like. But that's what you would do during a trending market. So the trending market entry is to use that one. Now we're going to talk about what you do at the end of the trend, because one of the things that I've found, and I've tested thousands of traders, most traders are not trend traders. Did you know that? Most traders are looking for swing points or the reversal points. They don't like to get in the trend. It's unnatural for most traders. So this is an end of the trend trading system. Okay, end of the trend. So what I'm going to do, it's all right. I'll change the color of this one. We'll make this one pink and the other one green, just so there's no confusion over the two. All right, so when we have a trend, we can draw a fairly aggressive trend line. It's almost better. The sharper the trend, like the higher the slope, the better. So don't be scared of drawing a really aggressive trend line. Like you think, oh, well, that's not really a trend. Actually, those are the best ones, because those parabolic trends that just accelerate, they collapse rather quickly. So what I would say about this one is you draw a really hyper aggressive trend line. Hopefully you've got a really strong marching market. And then what we're going to do is we're going to say, all right, back it up, go to another time frame and draw another trend line on another time frame. And so that's what I did here, where I connected this wick over here to the double touches, the 2 touches down there. And I've made this really kind of not nearly as aggressive sloping trend line on a higher time frame. And that's exactly what you want to do for this system. You want 2 trend lines. One of them contains the recent trend, and the other one is like an older one from a higher time frame. It's not doesn't have to be it has to slope, right? It can't be a straight line, but it has to, it doesn't have to be a really, it doesn't have to have an aggressive slope. It can be just like the one I've drawn here. And what we're saying is, all right, Mr. Market, when you've decided that you want to get away from this trend line and you want to violate it, and just, when you've decided that the trend is over, what I want to say to you is, so again, there's a couple of different ways to do it. You could wait for a close below this trend line, which would be incredibly far away, right, from the trend line. This is not usual. It doesn't usually do this, but in this case it did. And it was, how many pips is that? I don't know why my crosshair tool isn't working. It's the weirdest thing. Anyway, it's really bizarre. Anyway, it's about 168 pips or something like that. From 65 to 63.40. Yeah, 168 pips. So my stop loss might go up above this bearish candle here. Now, normally when it breaches, you might wait for the pullback back up to the trend line and trade off of it, just like we talked about before with the trends. Or you could wait for a pullback to a nearby support and resistance level, which of course would have been this one. In either case, you wouldn't have had an entry in this case because it just went. It just went and it never pulled back to the horizontal level, which I probably would have expected in this case, or probably wouldn't have expected because it was so aggressive for it to get all the way back up to the trend line. Sometimes you'll just have a little tiny bearish candle, it'll come back up. I'll show you other examples. You'll just come back up and touch it with another one, and then you can get in on there. But very similar to what we were talking about before. The only difference here is that you have these massive reward to risk ratio trades. Even with this trade, where you have 100, we'll call it 180 pips of risk, right? You still have 340 pips of reward, okay? Now, that's not quite 2 to 1. But normally these trades easily have like 3 to 1, 4 to 1 reward risk ratios because the target's so far away. But you'd be amazed at how quickly sometimes they'll get there, just because at the end of the trend, we often see these massive moves. The trend takes so many candles to get going, and meanwhile, the end of the trend just bloop, completely collapses. Are there any questions about that? Does that kind of make sense here? I can show you more examples. We had one on the Canadian dollar recently, and I think the Euro Kiwi. Let me just pull them up while I wait for your questions to run through. I think. Oh, that's the Aussie CAD. I want the CAD, not the Aussie CAD. Here, let me see if I can. Actually, let me get the Euro Kiwi. I was hoping that my lines were still on there, so I didn't have to redo everything. But let's see here. We're gonna go to the red and white candles for our colorblind friends, and then let's see if we can find this sucker. I think, if I recall, on this one, I think it was something like this. I'm pretty sure that was it. And then the daily one was something like this. Whoopsie. I'll draw this one green so we know it's. Why is it doing that? This will be, whoopsie. This will be green because this is our target. So this is the target. Boom. Okay. All right. So what we have here is green one now. That's not important. Well, here, let me back it up. So what we had here was the market was moving down. Now, admittedly, it was a wild kind of a move. It wasn't the smoothest of down moves, but it was making lower highs and it was making lower lows, right? And to be quite honest, I just thought that there was so much aggression in the retracements that it was going to bust through this sucker, especially when it hit it 1, 2, 3 times. I thought, okay, it's going to do it, and it did. Okay, it broke higher, came back down, and I was hoping for a more aggressive bullish candle here. You got one there, okay, and then wham, your target It's all the way up there. Actually, I thought the target was right around here. So I must have drawn my target line incorrectly. Apologies for that. Yes, I did. Sorry, I drew the wrong, because if I recall, it went straight to that target level and kind of just almost like blew through it. Let me go back to daily here. See if I can get this right. I might have had it something like this. I think that might be a closer representation. It doesn't look so. Here, maybe I wasn't looking up here. Sorry, guys. I wish I had my original chart. The problem is I delete these trend lines when the trades are done. Okay. And if I recall, although I was waiting forever for this one to go, I think, if I recall, I didn't get a strong enough bullish candle here. So believe it or not, I didn't take it. I was waiting on it. It did the break. It did the pullback. And I believe I didn't take it because this candle wasn't convincing enough. And then this candle went and it was like halfway to the target. So I said, darn it. And I didn't take it. So I think it was something like this. Now, a close above the trend line, you would have been sweet. Your stop loss down here, and you might have been looking at about 120 pips of risk. But 120 pips of risk, and well, it's about 1-to-1. I seem to remember that the target was somewhere up here, but maybe I'm wrong. Maybe I'm just drawing my target line the wrong way. That seems a little bit too close to me. You can see there's a lot of subjectivity in this. I think it was something like this, guys, but maybe I'm wrong. Maybe I didn't. I wonder if it was this. I wonder if it was something like that. We had like maybe that's what it was. We had like a blow off top. I'll have to go back and look at my videos, but it might have been this where it had kind of like a blow off top here, and I just kept these touches in the game, so to speak. Maybe that's what it was. Either way, you can see here, the main point is you want to get a really aggressive target. That's the key. And I think it was something closer to that. But anyway, that's what you're looking for here. So 120 pips of risk, if you got in on the close, you would have been sweet. You could have put your stop all the way down here, 120 pips of risk, and you would have had about 250, 240 pips of reward. So that would have been easily 2-to-1. So that's another example. And then the Canadian dollar also recently gave us one. How do you know where to place your buy or sell limit? How do you know where to place your buy or sell limit? Well, there's a couple of things that I'm looking for. It depends on your entry. My favorite entry is the pullback to the trend line. See how the market broke through the trend line here and did this pullback? I like to get in here. This is my sweet spot right there on the bend. That's where I want to get in. The problem with this trade was that that candle was not bullish enough to get me in the trade. I was concerned that it hadn't actually confirmed that it was going to bounce off that. And you can see that in the line chart. See how it's kind of like a half-hearted U here? What I want to see is a strong V, like something like this. A really strong V off that trend line, and then I'm in. Now you can see it did give you a big bullish candle there. So I suppose you could have gone in there too. But again, I wanted to see it pull back to the trend line and give me a bullish candle, and it didn't. That one might have had about 100 pip stop if you use the trend line as your stop level. And again, it was worth about 240, 250 pips, that one. But that's an example of another. These are called drop trades and reverse drop trades. So usually it will drop from one trend line to the next one. Let me show you the CAD, and we'll pull up another one. How much time do we have? Oh, we got time. Cool. Okay, let me just do the CAD. Let me just do it. Because we had this one. Was it daily or 4-hour? I think. Let's see. So 4-hour daily. There it is. Oh man, something like that. I don't know, something like that. I like closes. The problem with that is you're gonna miss it. I'm not convinced that that was the one anyway. I don't think that was the one. Let me see if so on this one, this would have been back in Feb. It was, I think it was this move down that we were looking at. I think I took this one. I think this one actually lined up for me. I'm pretty picky actually as a, I think the entry was this kangaroo tail right here. That one. So let me show you. So this was, we'll make this one pink just to stay consistent. So this would be a reverse drop trade. So there's our pink trend line containing the downward move. The market breaks the trend line. So you could have been in on a close here or a close here, right? If you're really aggressive. I probably would put my stop loss down below the swing low, or you wait for the retouch, which in this case would be this kangaroo tail here, and then boom, you're gone. Now, as for targets, this one went fairly quickly to the target, and I believe it was something like that. Let me, again, when you're at the end of the trend, you will often see these things rip into it. And it seems like it's so far away, but it's amazing how quickly it can get there. So here you go. So let me just zoom in on this one. This is a 4-hour trade again. So we've got our trend is there. The market is held by this trend line. It breaks out of it. It retouches it here. Nice little beautiful looking kangaroo tail. It goes up. It pulls back. Even if you had a break even stop once it moved up into this area, you still withstand this pullback, which is quite lucky because that's not always the case. And then bam, it just tags it right there. So again, on this one, depending on whether the stop's below the swing low here, which would have been worth about 45 pips of risk, 50 pips of risk, we'll call it, 50 pips of risk and 88 pips of reward. Or if it was 45 pips, it's just about 2-to-1, just under 2-to-1 on that one. So that's another example. Does that make sense? So you're not placing your limits. You're waiting for a close beyond the trend line or a retouch. Does that make sense, Benjamin? Cool. All right. So last one is an old classic, but you can get really aggressive with these, and that's why I wanted to highlight this one as well. Let me see if we can find one for you. I think we had, was it pound New Zealand? No, it wasn't pound New Zealand. What was one of these charts here? Was it my Euro Aussie? No. So here's another one, guys. Does everyone see this one? So again, here's your trend. Here's your trend line. It breaks the trend line, and then depending on where you got your other one, you have another one here, for example. Maybe you're not quite at profit yet, but you can see boom, 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 breaks it. Oh, look how fast it accelerated. It stopped at horizontal support, but still it's blown through it. But let's see if we can find my friend. My friend. I had a really good example of this other one. This is okay. This is kind of another way to do it. And this can be quite aggressive. I understand that. For some people, it's not going to be their favorite way to do things. But, and I'm going to, again, I like the red and white template now. I go through different phases. But on this one, kind of have multiple touches. And so now what we're looking at here is, and might even go to a 30-minute chart. So what we're looking at here is we've got a channel going right now. One thing that you can do, once you have at least 3 points, so high, so you define your channel by high. So now the question is, what do you do next time it gets down to the and what you really want to, this is a pretty poor example because it's not following this. What you really want to come to, like swing moves. Here, let me show you. Bounce, bounce, bounce like this. You kind of want to lock into swing moves because there's a rhythm, right? It's high tide, low tide of the market. So it kind of goes high tide, low tide, high tide, low tide. And once you see a high tide and it goes to one edge of the channel, what you're anticipating is that when it gets to the next edge of the channel, you can almost put in an order and just wait for it to get there. So for example, by the time the market had printed this candle right here, I might have had an order somewhere around, you know, here, 82.68, 82.70. And you can have a really tight stop with these so that, yeah, you're going to get stopped out. But the reward is like, if I have a 20 pip stop on this, or actually, that'd be even less, like a 12 pip stop on this. And, you know, I can go another 20 pips to the other side. So you can have really, actually, I'm not used to trading the 30-minute charts. So my scaling is probably off. You probably have like an 8 or 9 pip stop. But the point here is you're anticipating the bounce. So once you see the market falling and it's going low tide, you go, okay, it's going to hit my channel, and you can put your order in there. As soon as it wicks into that channel, you're in, and you wait for it to get to the other side. Now, now this one might have been a loser. The other thing is, you don't necessarily want to go against the channel. So because this channel is going down, it makes sense to take sells off the top trend line, right? Not necessarily buys off the bottom. It's so much easier if you can take sells off the top trend line. So until this point right here, you would have been pretty good when it got up there. Now, again, I don't know how you draw it here with this blow off top. You know, this blow off top here kind of messes things up. You could probably find a much better example somewhere here. Like there was one on, was it the Euro Yen? One of these pairs had a real, I think it was the Euro Yen. Yeah, here it is. This is the one I was looking for, actually. This is the one that I was looking for. Yeah, so here's an example of, you want to go with the sells off of the top of the channel because it's a downward channel, right? You don't want to go buying down at this trend line. You want to sell off the top one, and vice versa. If you get an upward sloping channel, it's the same thing. You want to take the buys off the bottom trend line, not the sells off the top. So hopefully that makes sense. Does that make sense, guys? You see kind of how that fits with the other ones. And what the nice thing about this is you don't have to wait for confirmation. Your confirmation is the trend line. Okay. Once it hits the trend line, boom, you're in. You can have a pretty tight stop, like a 25 pip stop on the Euro Yen 4-hour chart. That's a really tight stop. 25 pip stop. That's a tight stop. So that makes the reward to risk huge, right? I'm most comfortable, 4 hours and up, basically. So if I've got a 25 pip stop here, all the way, 120 pips to the other side finally, or 110, we'll call it. That's pretty good, right? That's 4-to-1 plus. So that's 4R plus on that one. So these are the sorts of trades. So for example, right now, if you guys have any questions on the markets right now, I can happily take a look. I sold the Aussie CAD here on, so that's the position I'm in right now, which is basically the market broke through this level, came back up, touched it, and it broke this low here, and that's got me in. So I'm in on a sell on this one. It's pulling back. It's about where my entry was now. So we'll see where this current candle ends up, but I'm selling it. I'm targeting 101.66, 101.32, and 1.0060 down there. Those are my three targets for the Aussie CAD 4 hour. Let's see if we can find other examples of some of these. Okay, all right, here's a good one. I've been watching this pair actually for a while. So you could have a channel on the pound Swiss, okay? So if I got my pound Swiss channel, I'm looking for sells here. So when it touches this trend line here, I sell all the way down to the next trend line, right? So that's an example of that. So again, this is a really super aggressive strategy because you're not waiting for any candle confirmation at all. You're just going for it. And you can kind of anticipate it once it gets there. I also use this same strategy off horizontal support and resistance, but it is aggressive. It's not for everyone, but it's pretty sweet if you, if you lock into a nice winner. Even, if this candle is going to close in, I think it's going to close in 17 minutes if I'm right. Is that right? I think this is going to close in 17 minutes. So this 4 hour candle is almost over. So what that means is, if this ends up closing quite bearish, even with this having a 52 pip stop, it still offers 80 pips. So it's still 50 pips of risk to 80 pips of reward. But ideally, you don't even want to have it like that. You want to get in when it touches it, and you want to be able to withstand a 25 pip pullback, or push through the zone, push through the trend line, and then so I've got 25 pips of risk and 120 pips of reward, that sort of thing. That's really what these are all about. Yeah, breach of the France find that a breach of the trend line coincides with the horizontal support resistance. Yeah, it really kind of. I agree. I've noticed the same thing, and I was kind of sort of wondering if other people had seen that. It's kind of one of the tricky things about horizontal support resistance is you can see them everywhere. So, and I'm sure trend lines are the same way for some people, but the main thing that I've learned is by using the higher time frame and drawing my zones on the higher time frame, I won't have too many of them. So if I'm trading this pound Swissy 4 hour chart, which I think is a great looking chart at the moment, I would not draw my zones in based on the 4 hour chart. I would use the daily. The daily is where I'm going to get my zones. So yeah, but I agree with Franz about that. It does often happen that way, doesn't it? Are there any pairs that you guys want to see? I mentioned I'm in the Aussie CAD, and that's about it at the moment. I'll show you a yen trade that I'm waiting on. I'm waiting for the yen to get up to 111.70 and print a bearish candle there on the daily. And if it does that, where we found horizontal support back here, if it does that, I will sell off of that. It's got to pull back up into there. It hasn't been there yet. It's only been as high as 111.42. So it's no good. But if it does get back up there, I'll sell off of that. And so potential targets would be, you can see it's kind of following a trend line move up here. So it would be perhaps even a breach of that trend line. But for me, let's say that it's the risk is 65 pips. So it could be 120 pips, 110 pips of reward to the first target down there. But beyond that, what's nice about this chart is actually, if you take a really long-term point of view, this could go pretty far, pretty fast. I don't really see much holding it. until it gets all the way down to 107. So yeah, there's gonna be a little bit of support here at 109, but I think if this actually ends up happening, then I think 107 would be a brilliant target. So that could literally be a trade where, let's say there's 60 pips of risk, and then 450 pips of reward, something like that. That's a beauty. I'm definitely keen to see if that one comes true next week. It'll probably be next week before anything happens, but that's definitely a lovely looking setup, that one. So those are the two main ones that I'm watching, Aussie CAD and the dollar yen at the moment. Any other pairs that you guys want to see, or are we all done? I think we're done. All right, guys. Thanks so much for your time. I really appreciate it. I hope you have a wonderful day. Thanks to those of you watching the recording, and we will see you next time at the Naked Trading webinar. I really appreciate it. Have a wonderful day. See ya. Bye.